following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
TFNN, welcome to the May 12th. Fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure you have a great course. Easiest do that. So remember that life is first, not to us. Dude, I mean, a little 2x4 shift. I mean, we can find the gift in every set of circumstances. Life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, you can give us a call locally, 727-445-1044. Would love to get an email from you, Steve at TFNN.com, but make sure in that heading line you've got something in big, bold letters. I don't know. Mastering probability, Trader's Edge, something, so that I can spot it in that junk email box where so many emails go. Of course, if you sent me an email before, I go ahead and I set up a little rule so that I will never lose it again out there. And in any event, let's go ahead and get this show started on fantastic and fabulous, of course, Friday. Of course, this is this is Tiger Financial News Network. You knew it was TFNN. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 36 points at 20,883. S&P is off 6, trading at 2388. NDX 100 up 7 points. Russell's off 5. Semis are up another point, nearly 2 points today. Gold is off, is up only $3. Silver up 13 pennies. So we'll take certainly a look at the metals. Try to figure out what Stevie is looking for. Light sweet crude is off 17 cents. He's trading at 47.66. Leading the charge the upside, you got the amazing one, Amazon, up $11. The Trade Desk Inc. up $11. Mercado Libre, boy, you love saying that name. That's up $8, nearly 3%. Priceline up $7. Regeneron Pharmaceuticals, we talked about how that equity was breaking out of a big consolidation, a potential breakout. We looked at it on a weekly basis. Let me just pull that. Yeah, how about that? So here is, well, this is a daily chart that we're looking at. But if it closes, and we could get a difficult task. We said, let's not call it was about 50 or 440. The actual high so far today has it challenged that high, 452.88. Pennies away, 700,000 shares today, moving into 1.5 million shares. So that's not too shabby. It's about in line or maybe just shy, but it's not really coming in with what we would call light volume. Of course, we don't know how it's really going to trade between now and 4 p.m. It's either at the top of the consolidation, which is a possibility. Now, look, if it can't bust them up, it tries to bust them down. That's the beauty of these consolidation patterns. In this case here, the bust them down likely find support. Well, it could be all the way down to the bottom, quite frankly. So you'll want to watch Regeneron Pharmaceuticals because, well, we only looked at a couple of them, but it seemed to be one of the stronger one in the top 5 inside the IBB. So maybe it's Regeneron Pharmaceuticals that provides you and I with a clue as to what that sector wants to do short term out there. Also trading to the downside, you've got AutoZone, Acuity Brands. They're off $15, $9. CyberArk Software down $6. China Lodging down $4. So there's some things to look at. But I want to look at what you want to look at. You just have to let me know. All right, so let's begin with the markets. Of course, you've been through this routine before. We're going to go take a look at what's going on inside the equity futures contracts because, quite frankly, they're providing us with the most useful information. And today's most useful information is being sponsored by the NQ. And if we take a look at that daily chart out here, what you're going to see is that there is a brand new box that formed today. Now, what's cool about this box both bulls and bears, quite frankly, is that it's a relatively narrow-ranged bar. Now, what we have not seen here for more than just an occasion of a day, and let me do this. Let me clean up the chart just a tad by turning off the weekly profiles, because those really are not in question. If we take a look at the bottom of the box back here in November 2016, one of the things you're going to see, and I'm really right now I'm at the date of November 14th, but one of the things that you'll see out here, which is unique, and so when it does show up on our screens, we pay attention to it, and that is that when you see the center of the box, point of control is what it's also referred to. In this case here, 46, 67, 80. Back then, you'll also notice at the bottom of the box is the same. Now, the only way that you'll really notice that is by looking inside my little red squared rectangular data box. So you'll see it says CTRD and BOTD. You'll see they have the same levels out there. Folks, now the beauty of that is that it's really strong support. And when it fails, nothing more bearish than a failed bullish pattern. We don't have that right now. What we can see is that with the exception of 1 day, 2 days, 3 days, 4 days, except for 4 days. 4 days ever since really what looks like November the 15th out here. Have we ever only on those occasions have we seen a close below the profile? And you waited for the very next trading session, confirm it. In other words, follow through, which is really so important when you and I are trading, whatever time frame it is that we're trading at. You want to go ahead and ensure yourself as much as you can that trend change has occurred out here. Now, again, getting back to, so why is that cool for the bulls and bears? Well, because we have a relatively narrow box as we speak right now. In other words, the bottom of the box is 56.12. We're trading at 56.81. Now, I might say 60 points sounds like a lot. And not that it isn't a lot. It's just a relatively narrow range where if the bears are going to get something going here, and I'm not suggesting that they can't short term, if the bears are really going to get something going here, we need to see a close below inside the NQ. And I really think this is where our entire focus needs to be. We could give a rat's patootie about what's going on inside the Dow, the Russell 2000, or the S&P 5, but I'm just kidding. But actually, I'm pretty serious about that, because this market is not going to crater with the NQ doing what it's doing. It won't crater with the if the XLF is moving higher ground. It won't really crater with the semiconductors moving higher ground either. It'd like to have all three moving in the same direction. But we're just focused right now just on the equity futures contract, which is really important because we don't know what crazy stuff is going to go on around the world over the weekend. It just seems like it happens day to day. And therefore, when you take a look at, only the regenerate chart is posted. Well, that's a problem, Duffy, if you're not taking a look at this. Say, Al in the den, can you make sure that we've got the NQ M7 daily chart up on my screen out here, and give me the high sign? We want to make sure that our viewers and listeners out there are taking a look at the same chart out here. So cannot see the NQ. That's Duff. All set? No, we are. So, Duff, you may have to restart your system. My apologies there, Duff, if you do, but I can see Flex's. We're going to come back to this after 2 minutes. I want to spend a little time, folks, because I really believe this is because we're going to look at the bullish side, too. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So we're taking a look at the NQ out here, and for any of you that were struggling with seeing it, hopefully you've got it on your screen right now. And again, I think that this is, for me, this is the area of focus. Whether it is you or not, it's going to be the area for me. And, come Sunday evening when the market's open, we don't, if you were, for whatever reason, to see the NQ trading below 56.12.15, it would be an indication that, okay, things are starting to get ready to roll to the downside out here. If not, all we're really looking at is sideways chop or something along those lines. Now, this box here, the cool thing about the box as well, I'm going to turn price off. Give me a moment just to do that, is because you can see that really the setup of this structure. See, the setup here, that was the prior box that was in place, right? Both you and I know that this was a bearish structure, or a structure really where sellers were in control of that entire box area. That's from the top to the bottom. So it was right around the 56.44 level down to about 54.85, something like that. And the reason I would say that, because that point of control being closer to the top. That says that all the snipers were really hanging out between about 56.45 and 56.05. And just like in a game of Stratego or War or whatever the board games are that maybe used to play, or the real games out here, it says that line of soldiers just simply lost that battle and they were overrun. Now what we have is actually a bullish structured box where that point of control is slightly closer. And I don't mean just slightly. It's closer to the bottom than it is the top. So sellers are the ones in control. Now, closing above 56.79.35 today. I mean, if you're short, then make sure you go to church and do some good prayer work, because this is saying that the NQ wants to do. It just would have taken out a bearish structure, okay, market profile. It would have closed above a brand new profile that was up there that said the petitions didn't have it figured out, and that this wants to continue moving higher. That's the bullish side of the trade out here. And if we see it close above that, chances are prices are going to continue moving higher, at least through midweek, if not beyond that. So it's just important. Now, the other thing that's important, and the reason why I'm focused on the NQ, is today is going to be a Tom DeMark setup, the Tom DeMark 9 count out there. for those of you that are bowlers. And, you know, because I don't know if you like to leave the 9-pin or not when you're bowling. You don't pick that off from a spare. But if we take a look at the NQ, you'll see it on this chart here. And that's where you've got 9 consecutive closes above the close of 4 bars prior. Hey, you try saying that just once in a row and see if you can get that out of your mouth. But for those of you that follow the system, you know what I'm referring to. So today, unless there's some catastrophic event that we see take place between now and 4 or 5 o'clock, you know, it's pretty much going to show up as a TD9 setup. Now, the beauty is when you add that along with my pain line, that's with you in great detail Wednesday. For those one of you subscriber, it's pretty easy to do that on the homepage at TFN.com. Until price closes below that, it's only a warning sign. Here's, as an example, the last 9 count that occurred out here was on May the 1st, right? Nice little up spike there. There would have been no reason to have used that as a signal to sell the market or go short. In fact, we've never seen price close below Stevie's red line out here. Yeah, yesterday was a test, but an absolute rejection. Today, another test and an absolute rejection out there. And the reason I say that is because of years of studying these 9 counts and trying to understand and identify a pattern behavior that you and I could take advantage of, both on the buy side and on the sell side. If we go back to a prior 9 count out here, you're going to look at February the 15th. You'd see price never got closed below Stevie's red line out there. If you don't close below Stevie's red line, there's no reason to put your money on the line and take the short position unless you're trying to really sell the top tick. And I can't speak to those folks out there. I just, because that is such a art. I've only done it just a couple of times. And the times, it's easier to do it if you're trading the ES as an example. You only have 4 ticks. So it can be done. And I did it once with the Russell 2000. I remember couple of guys called me and they said, that was amazing. How did you do that? And I told them the truth. It was pretty much luck. And don't think that was like a mastered skill out. It is hard to actually sell the exact top tick or the bottom tick. What this tool does for us is it takes that, it removes that and says, we just don't care. Jimmy Crackhorn and I don't care. I don't want to go ahead and take the longer short signal until I actually get the confirmation of that. And it's well-heeded advice. Here's another prior 9 count out here, January the 17th. And maybe I'm spending too much time on this for you, but it's really worthwhile. And that way what it does is it provides you with more certainty or confidence that when I make a market call, it's not because I'm just pulling something out of thin air or any other portion that is close to my hands out here, that it's really done with great thought of other prior patterns out there. So back on January 17th, you never saw price close below Stevie's red line out there. So it's really, really important out here to, so we have the potential. That's what's really, the other side of that potential that has me perked up is the mere fact that we have price moving higher with less relative energy. Still no bearish reversal signal, but that occurred back here, it looks like on May 8th, May 9th. My date on the bottom is sometimes a little bit screwed up. I can't fix that. Now, for those of you that say, oh, man, I don't trade the NQ, I don't even get access to it, well, let's go take a look at the NDX 100. Let's just simply do the same thing, but look at the cash indice out here. So did I pass that? Yeah, I probably passed that. What the heck was I thinking? The indices are all the way up at the top of the screen. You should have just simply hit me with a 2x4 because and say, hey, Steve, things happen for you, not for you. So if we go take a look at the NDX 100, you're going to see same setup. Now you have to trust me in that today is going to be a 9 count. You can see that price is above Stevie's red line out there. You might ask me what price point that is. That's 56.7607 as we speak right now. If I take this chart, well, can I go back to 2007? Oh, son of a gun. I most certainly can out here. How about that? We didn't have one of those counts in 2007. But as I have shared with you, shown you in that free workshop is on your members page. If you are if you ever subscribed or sent in or done anything for TFN, you have a members page out there. You can get that. If you don't remember that password. Like I don't remember the password out there. You can just hit the request password, and they'll go ahead and send it to you. And then you can watch that 30-minute workshop, and you'll see some of the tools, the 2 tools that are present in every major bear market move. Now, the cool thing is they're also present, and it works on all different types of time frames when you're seeing short and long-term market tops and bottoms out here. We don't have a 9 count, by the way, but we do have that price relative strength divergent pattern, which we'll go into detail next Wednesday out there, and it's worth paying attention to. Hey, no surprise that it was present in October of 2007. That's the NDX 100. So that's why we pay attention to them. Doesn't tell us the extent of the decline. You and I can utilize these market profiles and swing points, retracements, so on and so forth to help us determine that. But along the way, here's another 9 count that occurs. So as long as we're back in 2007, October 1st, 2007, there's a 9 count. Didn't see any close steamy red line, right? So that in the picture. We'll do something other than NQ. We've spent a half an hour on that. We'll go find something else of interest. I'll check my emails.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So I had an email that came in Of course, just as I was coming back on the air, my Hotcom thing reset, similar to a problem that one of our dinners was having out there. So I just sent a message off to bottom of the sake barrel. Thank you. Oh, I appreciate that, Mike. Here's what we're taking a look at. Pradeep sent in a email request. Thank you for doing that, Pradeep. He said he'd appreciate thoughts on these 2 instruments. We have them up on our screen. Team is one, which is Atlassian Corp. And then you've got Twilio, Twlo. So we've got one on the left, one on the right. And what he's asking for, he or she, I apologize if I have made a conclusion here, but Pradeep is asking for, do you have a suggestion for a stop for both of these? Now, you're up on one, significantly down on the other. Less significantly, thank goodness. But here's what we can take a look at. Let's take a look at team. Let's go see what the team has for us. Now, in the case of the team, you're up near all-time highs out here. That was achieved a few days ago. Like, this is a daily chart that we're looking at. I want to on a weekly chart just for the heck of it at first, because I would like to see if we're up over that swing point with volume. It just improves the likelihood of a large A to B equals C to the upside. And that's, I'm looking at the week that began 9/19, 5.2 million shares. And last week you were up over with 5.5. I like it. So Pradeep, I'm going to give you the stop, but I'm also going to give you the potential target on here, which is a weekly confirmed A to B equals CD to the upside. And that's going to give you so I would have at least an OCO in. You can always change these. My clients and I did this many times during the rise of the NDX 100 from when we went long. By the way, we're out of that trade. We're now neutral right now. We were stopped out because of an adjusted stop yesterday. A little disappointed. But on the other hand, I have some messages that are I have some conflicting messages, and I hate confliction out there. I like to have certainty, as much certainty as you can have. The easiest way to have certainty in a market is to have your order in on both sides of the trade. If it were me, I would be having an order in at 42.04. And my stop would likely be, this is where there's a problem here. To give you the stop, then I just simply have to go look at the average true is. That's the only way that I can really do that. And when I say average true range, I'm going to my position size calculator. It's available to all subscribers on the website. This is what it looks like right here, which is a great way for you, because position size is the most important thing in trading and investing. And when I say position size, let's go ahead and put this in here. TEAM is the ticker symbol, just to show you as if we were going to go ahead and get in the trade out here. And as soon as I pull that up, it pulls up the name of the company. You can see the average true range of the last 10 days worth of data says 95 cents out there. You'll see that my system automatically calculates a 1.618 stop. I believe the most important thing you could do is manage your money. And in managing your money, it says you have the reason to enter a trade, and you're going to get the right position size. And a part of that means you're going to use the appropriate stop. An appropriate stop is something outside of the normal bounds of what has taken place over the last 10 days. If you want to place a tight stop, it means you actually know what price is going to do. And if you do, you got to do a radio show, or at least just send me all of those trades, because you absolutely know what price is going to do. An average true range, which is basically the average daily movement, if your stop is too close, you could have the right trade and get stopped out and basically lose that capital that you put up there. I don't want you to do that. I don't also want you to do a close, sometime at the end of the day where you have to make a decision. I want you to have that decision in place right now as I pound this table out here. And the easiest way to do that is to say, the stock should not move 1.618 times the average true range. Shouldn't move more than that. If it does, it's likely telling me there's something wrong. Now, you could use wider stuff. You can put in here 2.0, 2.618. I just want you to have both sides of the trade covered. So my suggestion to you is 95 cents times 1.618. We're going to call that $1.50, but you figure out what that number is and have that below. At a minimum, have that at least You might want something larger because you've got a long-term view. I don't have a profile for team out here. As an example, if we were going to buy this stock, how this works, just to go ahead and finish this off. Number one, we'd go ahead and select that this is a stock. We'd say that we're going to go long. We'd put in our capital that we were going to trade. I'll just put in 10,000. I like to, when I send out trades and newsletter, I like to use $10,000 so that you know how many shares to buy in increments of $10,000 in your portfolio. Makes it pretty easy. Then you just simply put in your estimated price. In this case here, if we put in 37.01, where it's trading at right now, and we say this is going to trade up to, we're going to say $47 is where it's going to trade up to. What this will tell us is how many shares to buy, where to put our stop in, which will really be calculate what Pradeep's stop ought to be. Also tells us that if we take a 1% risk, which is the default, we're going to have 24% of our funds allocated to this trade out there. On an individual stock, that is a bit much. So this says really you only have to go ahead, and you can either widen your stop, or you can just risk 0.5% on this trade out here. And if we take a look at this, would say that the stop would be 35.46. That is 90 times 1.2, which is basically $1. Hey, not bad. I said $1.54 out there as a stop. So just consider that. You would also request, I won't go through all that detail. Yeah, I'm sure that board, they'll have been, yeah, you know what, out of you. But instead, we'll go take a look at this equity, which is Twilio. Now, this is a bummer. Because this, Pradeep, you must, in this case here, this is called bottom fishing because prices come all the way back to the bottom, basically, the June 23rd IPO date. Good news is there's 21 million shares down there. The bad news is you gapped down there a week ago. And you did it with 23 million shares. So that's just kind of like a bummer out here. You want to stop on this? The only thing I can do is say, you don't really want this to trade below 23.66 out here, and you're at 23.79. By the way, the average true range on this TWLO, just I'm doing this off screen, is $1.82. So you might have to have a wider stop than what I just gave you, but put a stop in. Even if you do have stops in and they get jumped, just make them market orders. Just get out. You can get back in, but just get out while you don't have to make you're neutral when you're out of the position. When you're still in the position, dealing with all those emotions of shoulda, woulda, coulda, that kind of stuff. Okay, hopefully it helps you out. Let's go to Garo in Newport Beach, California. Garo, thanks for calling. Thanks for holding. How are you today?
Very good, and you, Steve?
Excellent. So you're making my week. I get two calls this week. That's a beautiful thing.
No, it's fine. I'm learning a lot from you, Steve. A lot. Even though when I don't call you, still I'm listening to you, and I learned a lot from you. Be honest.
Well, thank you.
All the time.
Well, I learned a lot from you too. So we make a good team.
Thank you. Regarding Snap, SNAP,
yes.
I'm out of short. That what I'm hearing there from my friends up in Seattle, Washington, and some in Boston, that the whisper number on the bottom line is $17.43.
Hey, we're just going to break right now. Would you be kind enough to hold on? Okay,
yes, sir.
Listeners want to hear all the inside action you've got on Snap, SNAP. Right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, 39 S&P is off 5. We're on the line with Garo in Newport Beach, California. We're going to be taking a look at the stock for SNAP, SNAP, probably something that Garo and I know basically nothing about, nor will we probably ever have it on one of our mobile devices or ever use it. I don't want to speak for you, but think you'll be a big SNAP user, Garo?
No, I don't know. I don't use this kind of. I don't even use Facebook at all. I'm from the old generation. I don't believe in something that is imaginary. I think a stock is something that you can see and you can touch and you can smell it. Something like Intel, something solid. Other than that, Snap or this and it's good to trade. It's very good to trade and make money.
Exactly. And so, folks, even though we don't use it or can't imagine how we would, we are going to try to find ways to make money off of it. So you're hearing kind of the whisper number is $17 would be a level for support. Was that what I heard before we went to break?
Yes, sir. 1743, that's what they say is the bottom number. That's going to go there and rest, and it's going to hover for a week or 10 days, and from there, it's going to take off, and we'll never see that 1743 again. So I want to see if you see anything like that, because I don't have no record or any background from this stock. I don't know where that 1743 came from. What did they add up together and it came to that number? And so something that I cannot come with that number after my calculation, I don't believe in it. But I want to see that if you see such a number there.
Well, the only numbers a way to get there, because that was your question, would be Fibonacci related. And if we take, oftentimes the way that stocks will move, charts will move, doesn't matter what it is. You can take a look at Fibonacci expansions between swing points. And in this case here, Garo, I'm using the March 17th low, which was $18.90, and I'm using the high from the trading day of March 27th, which is $24.40. If we take those two swing points and then multiply that difference times 1.272, that will go ahead and take us down to $17.40, not $17.43, but let's not quibble over 3 pennies out there. The actual low so far in the stock from yesterday down at the 17.59 area was only there 1 million shares. It kind does work is, and this is where the 1740-ish number would be kind of cool, would be if you see a test and a rejection of that swing point. So that's 1759. So maybe he goes down to 1743 or 1740, does it on less than 131 million shares, closes back above 1759. That would be a signal from a price volume standpoint that the selling has dried up. Doesn't mean it takes off the next day. In fact, if you were to read Tom's book, The Art of Timing the Trade out there, what he would suggest is you wait for that next sign of strength. You suggest that this might move sideways for a while and we'll never see it again. So if we combine Tom's work with, let's say, Larry Pesavento's work, who really popularized the Fibonacci series information. He didn't create it, but he certainly popularized it and used it on stock charts. You would see a sign of strength and then a pullback into that sign of strength, maybe like a 0.618 retracement. And maybe you never see 1743 again, but a pullback on light volume or maybe into a market profile at that stage would really be your signal. So I can see the 1740 level, close enough to 1743. That's probably how they derived it. And, and that is how you certainly could trade it, just your first light volume test. I know that what you'll do, you'll go down to 30-minute chart, and you'll for that 5-day or 5-period moving average, because you'll be on a 30-minute chart as an example, and you'll wait for that across the 21-day before, and you'll also look for a parabolic SAR, won't you? Is that the technique that you would use?
Absolutely, yes, sir.
Yeah.
Yes, sir.
Yeah.
But I have to wait for that to be created. But if you have some previous information from that chart, you can estimate it roughly, that where this is going to go and where it's going to swing. But when you don't have nothing like that, then you have to only depend on Fibonacci retracement. That one indicator is not enough. There should be 2, 3 indicators that one has to confirm the other one. But
sure.
Yeah, I see exactly where you're coming from. Yeah, 17 and change. I came with that number, but I wasn't very sure that can be that number. But yes, absolutely. If it hits that 17 and change, that has to hover there for a while until it builds some support. Other than that, it can stay there for 3-4 days, and from there it can go down to $10. You see, so.
Well, that is exactly the point. And I'm glad that you said that because it can easily go down to $10. In fact, the confirmed the confirmed A to B equals CD pattern has this going to $13.86. Because the B point, the swing point here, which was March 17th, was taken out with wide price spread, accelerated volume, and that would say that really this doesn't want to just go to 1740. It more likely wants to go to 1386, 1099 out there. But unfortunately for you and I, this is traded for such few days out here, March 2nd being the first day. These are only potential patterns. I think that the way, if I were to just break down the conclusion that you've drawn now, which is this is going to be like a Facebook type stock, it's going to make some type of low, which we'll never see out here, is I would wait for that sign of strength, and then try to utilize your systems or some of our combined systems to figure out the entry point. I'd wait for some type of confirmation, because if that's the case, we don't have to worry about buying the bottom, right? If this thing is going to just take off and you're going to hold it, it's going to blow past $30 out there, sellers will come in and have to tell us. We'll see some type of sign of strength out there. That's kind of my take at this stage.
Absolutely, absolutely. I have to keep an eye on, put him on the radar and just watch him. Yes, absolutely.
Yeah.
Sure. Absolutely.
All righty, my friend.
Sir. Yes, sir. Yes, sir. Thank you so much. Thank you.
You bet.
That
was Garo. You bet. That was Garo. You have a nice weekend as well. And by the way, his parabolic SAR dot is well away from where we're trading right now. Yeah, on a 30-minute chart, it's 1995 before Garo even entertains this, and that's obviously well above the 1740 level out there. Okay, so let's take a look at. We haven't looked at gold, and so let's do that because it's interesting. it's interesting to me. Gold's only up $3, and we're seeing follow through on the Japanese yen. So we have to start here. I'm going to go ahead and get rid of this retracement. Now, we don't know if this is just a normal retracement that's going on or not, but we have enough data points that we can watch. So yesterday was a bearish reversal signal inside of the Japanese yen after making the 0.618 retracement. What we don't know is this just going to be a pullback to set up the C point of an A to B equals CD, or was that really a C point yesterday of an A to B equals CD to the downside? I don't know. In order for it to be to the downside out here, which is what gold lovers and silver lovers and mining lovers need to see, we need to see some areas of support fail. Well, today just so happens to be sponsored by the TAS Market Profiles, a brand new profile that formed out here. And the bottom of the box is 112.4. That's the level that needs to be busted if gold and silver are going to start their next run to the upside. It's really that simple. I don't know that it is at this stage because the profile formed below price. That's actually back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I request to go take a look at General Electric here. It's just tanking as we speak right now. Tanking. Let's go take a look at the volume inside this equity. Trade on at $27.95. GE is one of those stocks that is not, I repeat, not in bold capital letters, not going to benefit from any repatriation or any type of tax changes in the tax laws out here. These bums don't pay any tax out here, and I'll just call them bums, just in a kind sense of the word out here. But do not be investing in General Electric because you believe they're going to have a Trump bump out here. It just isn't so. This is, in fact, take this off of your radar screen out there with regard to increases in dividends and so on and so forth out here. This is just simply a disaster. When I say disaster, referring to it compared to many other equities that my subscribers and I are going to take advantage of out here. Those companies that I've been doing a study on that can't guarantee it, but they are the best ones that are lined up to be able to take advantage of the upcoming tax legislation. Now, the question of try to identify where this is headed to, the next target for me has to be the sign of strength from all the way back in October of 2015. It's an open gap out there. That price level is from 26.22, maybe down to a high of 25.49. I think you just have to take this kind of one day at a time out here. This could be forming several kinds of A to B equals CD patterns out here. The volume last time price was down in this range was on November 3rd, 23 million shares. You're at 41 million shares. So you're pushing into a swing with lower price. There was a little bit of a breakout with 47 million shares back here on February 16th. So that says this area around February 11th, which has 80 million shares. That's in the 2710, 2803 area. That could be. I'm certainly not saying to jump on board and short the heck out of this. And we typically use or have used in the past GE as a bellwether for what's going on inside of the Dow. Personally, I think I'm going to look for something better than General Electric these days, especially as we move into Dow 40,000 or 45,000 out here. I think GE's just simply not going to be the one that we want to focus on and pay attention to as the so-called bellwether for where the Dow is going to go out there. Instead, I take the Dow 30 stocks and figure out which of those 30 are going to be the ones. I'm sort of suggesting what one might do out there. Which of those stocks are really the ones that are going to benefit the most from the tax legislation? Apple, you know what I mean out there, right? You got Apple in there, and you've got GE, number 29, right? Who do you think is going to maybe pull the tide higher out here? So in any event, with regard to the right now, the target that line back on October 5th. Okay, back to gold. Here's what I'm watching for out here. I'm really watching silver when I say back to gold. How about that? And I'm watching that because, shoot, where did that chart go? Maybe I just have to switch tabs. Let me switch tabs out here. What happened to the camera there? That's weird. Let me see if it's here. Oh, man, I had this thought process out of here. So basically, I think silver is one for us. It's testing Stevie's red line out here. That's what it's done basically today at the 1640 area. And you can see how far away gold is from its red line, which is 1239.70 right now. So Sunday night, if silver's trading above 1649, you can participate more out here. I'm not saying the trend has changed. We need the yen to break out that bottom. Folks, have a terrific weekend. We'll see you on Magnificent Magical Monday. Stay tuned. Your favorite polar bear line is up next. David White, Tom O'Brien from 3 to 5. Have a great weekend. See you Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.